On today's show, we're going to talk about 401k pitfalls and what you can do to improve that portfolio. Stay tuned.
Welcome to Farm Truck Financial, where wisdom and wealth ride shotgun. Join Eric Kearney, president of Retirement Wealth Advisors, who believes that the best kind of planning happens when four tires hit the road. So hop in. Today, we're talking about investment strategies that drive results.
Farm Truck Financial, we're riding with you.
And today on Farm Truck Financial, I am joined with Joseph Lanza, investment advisor with Retirement Wealth. Hey, Joseph, how are you?
Doing great, Eric. Thanks for having me.
Hey, thanks for coming back on the show. We always appreciate it. It is a wealth of information that we always get from you. So today, what we want to talk about is your 401k, and more than likely, you're not taking care of it the way you should.
Yeah, I mean, 401ks have become a huge part of everybody's retirement, right? I mean, think about how different things have changed from 40 years ago. Yeah. You know, with pensions, everybody had a pension. Nobody really paid attention to retirement planning because it was just, hey, when I get to that point of retirement, I'm going to get, 70 or 80% of what I was getting during my working years.
Good life.
Yeah, don't have to worry about much. Inflation, I got a cost of living adjustment on there. I'm pretty much set. Now you flash forward to today, only 15% of employees actually have a pension now, right? So everybody else is using a 401k. Well, how do these accounts work? Oh, I have this match. Yeah, I guess I put money away into it, but how is that being invested? How do I make those decisions to make sure it's invested properly for me? How do I know I'm putting enough money into this account as well? What do I do once I retire with that account? Do I roll it over to an IRA? How does it manage then? There's a lot of unanswered questions out there that I think aren't getting answered. It's not in the employee handbook. Hey, this is how you manage your 401k and how you can set up your retirement plan. Unfortunately, that's just the way it is now. And so I think people really need to start paying much more attention to these 401ks.
I grew up in upstate New York where IBM originated in Endicott, New York, and everybody had a pension back then. And now all of a sudden the 1980s come along, they're laying off people, they're sending jobs overseas, and everybody's like, what the hell is going on? And really the Roth IRA has only been around since 1998. So we are still living in a pretty modern financial world, yet we still don't understand how it operates. And so when the 80s came along and they said, hey, you're done with your pension, here's a 401k, now the responsibility shifts to you. Now I have to raise my family, I've got to take care of my parents, I've got to work my job, and now I've got to manage this thing too. There's so many questions.
Yeah, I remember that statistic that came out not that long ago where a study found that employees, they had a free match into their 401k, and it would take them 17 clicks of a button on a mouse to set up that 401k. And like 30% of the people didn't do it because it was just too many clicks. Oh, I'll just put it off. It was 17 clicks, right? 5 minutes of your time to set up that 401k. No, I won't take care of it. I'll do it later.
Here's my gripe about this too. ERISA was created in 1974. They're supposed to come through and protect employees, make sure that their benefits are there. They have failed miserably because people don't know how to manage a 401k now. They don't understand what a match is. They don't understand the Roth option that they have in there. We do have a client who's a very successful client. The one thing that changed his life, and I always love this because one sentence can change your life forever. He was in the back room taking a break, eating a sandwich, and a gentleman comes out to him and he goes, what are you doing? He goes, just eating a sandwich. And he goes, I want you to fill out your paperwork afterwards. Do you know why he filled that paperwork out? So he didn't have to go back to work. Another 15 minutes of sitting down, but he filled out his paperwork. That is the reason he's a millionaire today. And he equates that and he gives credit to that gentleman who said, simply open up this account.
Yeah, he'll never forget that, right?
Never.
You can literally think about that date. You actually took action and set up that account. And the longer you wait, the more potential growth you're losing out on, essentially. But there's also a question around, well, what do I do with these 401ks once I actually retire? Do I move them over? And so many people, we see it all the time with people that come in. I think I have this 401k from like 10 years ago. I'll try to get a statement. I don't even know who to call, or I think it's, it wasn't much money in there. But after a while, if you've worked many jobs, well, how much is not a lot of money in that account? And how many accounts do you have to have that are just piling up from old employers that you actually start taking action?
We get so excited about a new 401k. Why aren't we taking care of the old 401k?
Exactly right. So a study saw that in America right now, there's 29 million forgotten about retirement accounts. just accounts, not amounts of money. So 29 million accounts that have not been rolled over, haven't been changed, nothing's been moved on that. That equates to $1.65 trillion in America right now that is just not being managed,
Right.
not being accounted for.
Sitting idle.
It's mind-boggling to me. I don't understand how this could be the case, how this amount of people do not care about their retirement enough to just move an account over or figure out more information about it.
But they care about their lifestyle, don't they?
Yeah, of course. Yeah.
So coming up in the next segment, we're going to talk about why your money is going to support your lifestyle. It is not your lifestyle supporting your money. Stay tuned.
Do you have questions and concerns about your money, lifestyle, and retirement? Like so many, investors today worry about living expenses, healthcare costs, inflation, and stock market volatility. Instead of worrying, start planning. Eric Kearney and his team at Retirement Wealth Advisors want to sit down, get to know you, and start to build a plan that matches your vision and goals. Let's have a real conversation about what's important to you and how we get there. We'll help build you a plan based on your goals, lifestyle, and income needs, with financial clarity over complexity. Call us today for a farm fresh second opinion. Remember, you only retire once, so let's get it right the first time.
We want to talk about your 401k and how it can be better managed. So, Joseph, you see a lot of people who have a lot more questions about their lifestyle, right?
Yeah.
What fuels that lifestyle?
Their money. At the end of the day, it's your money. It's getting ready for that retirement. You know, people always get very excited about, oh, this is my bucket list for retirement. You know, I want a trip to Italy and Greece, and oh, you know, let's talk about your lifestyle. This is how many times we go out to eat a month. But sometimes people don't even, they understand what their lifestyle is, but not monetarily even, right? They don't understand how much that's truly costing them on a monthly basis. But again, what fuels that? When we're working, that's getting paid for. We might even hopefully have disposable income every month. We're not so worried about, you know, how much it's costing because it's getting paid for essentially.
Right.
What you have to understand is once you go into retirement, the paycheck stops. Now you have to actually start pulling from your assets in retirement. That's a huge mental shift that a lot of people are not necessarily prepared for. And that's what we're trying to do through financial planning.
Yeah. And I'll tell you, the biggest thing about this is I want to get people excited about their money. I want you to challenge your status quo. I want you to say, no, I have this pile of money. I want more money. I want to build up this bucket. We are in an accumulation stage. We're working, we're driving, we're getting that paycheck. You want to get a raise because you're working harder. You want the same thing in retirement, but we are mismanaging our 401ks. We're focusing on our lifestyle. And a good example is I have a good friend who left his other job, went to another job, and then got another job. So there's 2 existing 401ks, and he's already interested in his new one. So we have a phone conversation, and I get on the phone, and I'm like, okay, here's what we're going to do, Matt. And he's like, yeah, I've got this old 401k. I'm like, okay, we're going to roll those 2 over, and then we're going to look into a Roth 401k with your new company. Joey, we didn't even get into that subject. And he's like, I want to buy a beach house, right? And it's like, you can't afford a beach house, right? Not yet.
Yeah.
That can be a golden objective. But honestly, the whole phone conversation just stopped. We were done talking about his 401ks. So now all of a sudden, guess where they are? They're still sitting there. And this conversation was 6 months ago. I shoot him a couple texts. Yeah, I got to get that done. About that beach house, still looking. We're focusing on the wrong thing. Mm-hmm. This is what Americans are failing at. So the other thing is that if you find $1 on the ground, do you pick it up?
Of course.
Why
would you not, right?
Why would you not, right? So why aren't we taking the match in our 401ks? We are getting matched. Our employer is giving us money. We match that back. It's free money. But when we talk to people, they're not taking advantage of that.
No, I mean, I remember one time I actually showed an individual, hey, you're missing out on a match here. This is how much, if we just contribute X amount of dollars into the 401k, you'll actually get matched that same amount into your 401k. And this over a 20-year period, look how much money you're going to have in the 401k. Do you know what that person said to me? That's a lot of money to put away a month.
Yeah.
And it just grinds your gears so much where it's like, oh, look at the big picture.
Right.
Look at where you're going to be down the road. How many years are you going to say, oh, I can't sock away an extra money until it gets to the point of oh, now I can't stop working because there's nothing to support that lifestyle that I loved living so much. It really is those priorities that we just don't have in check.
Absolutely. And so over the years, people have often said, Eric, what do the wealthy do differently? One of the things that the wealthy do differently is they invest first and they spend what's left over. Typical Americans, unfortunately, we spend first and then we invest if anything is left over. So what we have to do is we have to actually say, okay, we have utility bills, we have insurance, we have taxes, we have groceries. Oh, I also have a Roth IRA. It needs to be an actual goal and objective that we include. It has to be a non-negotiable. Where are your financial non-negotiables in life? That's what I want to know. There's got to be a set of tools that you say, okay, from a financial standpoint, this is where I stand on something. And I don't think that we have enough non-negotiables out there.
Yeah, make it part of your budget. Like if you're going to put a budget together, make your investment accounts, the contributions to those, a part of your budget. And, with a lot of our clients, I work with a lot of their children as well. And sometimes clients will say, hey, I have children that are high income earners and they're, setting up for retirement. Can you, do a second opinion, just see if they're doing what's okay and best for them. And a lot of times with these children, they have a lot of disposable income on paper, right? And I say to them, you got a lot of money here every month. Where's this going? Because I don't see it necessarily in your savings account or your 401k. At the end of the day, if you don't have a plan for that disposable income, where it's going to go before you get paid, if you don't know where that money is going to go, it finds a way to get spent. That's just human nature, right?
Absolutely.
You got extra money in the checking account? Yeah, we can get that dinner tonight. Yeah, we can go on that vacation. Money is there.
Yeah.
If we don't make it a priority first in knowing where it's going and be on a systematic plan, that's when we start to make mistakes.
Yeah, for sure. So everybody, in the next segment, we are going to talk about the pitfalls of your 401k and how we can fix them. Stay tuned on Farm Truck Financial.
You know who has one of the toughest retirements? Procrastinators. You keep telling yourself, yeah, I'm going to get to that. But after months turn into years, you realize that time is one investment you can't buy back. The earlier you start, the longer your money works for you. Stop letting someday steal your future. The best time to start was yesterday. The next best time is right now. Don't let procrastination be the reason you work longer and retire smaller. Call us today for a complimentary review of your finances. And remember, you only retire once. So let's get it right the first time.
And welcome back. Having a great conversation about your 401k. And now we're going to talk about the pitfalls of your 401k. Joseph, you and I get so frustrated because the 401k is sometimes the first place where an American can reach the double comma club for their retirement. They're reaching that $1 million mark. But for some people, it's been nothing but a struggle because of a lot of pitfalls that they've done. What have you seen?
Yeah, I think that they're mismanaged inside of the 401k, meaning the investments that actually make up that 401k. And to be honest with you, some people even say like, oh, well, I'm socking away all this money in my 401k. And we'll say, well, how is it invested? It's invested in the 401k. Well, okay, well, what are the funds in the 401k that it's invested in? Right. Well, I don't know. I've just been putting it in the 401k.
Yeah.
Right. So 95% of participants in 401ks right now just automatically let it go to a target date fund, meaning they have no investment selection, right? It just, oh, I set up my 401k. Oh, no, I'll let the plan choose it for me, which it goes to those target date funds, which we could probably do a whole show on target date funds. But ultimately, that fund doesn't know you any different from anybody else that you're working with. And Eric and I have talked about it before. It's kind of funny. Eric's from upstate New York. I'm from Florida. If we worked for the same company and he has a 401k and I have a 401k, and if we were the same age, I'm not saying, but if we were the same age, the lifestyle of somebody up in upstate New York is drastically different than somebody in Southwest Florida, but they're still invested in the same target date fund.
Right.
Again, they know nothing different between you and anybody else that's invested in that fund. Nothing is personalized about that target date fund.
It doesn't understand what's going on from an economic standpoint. If the closer that you get to retirement, the more fixed income you're going to have in there. Well, if you take a look at the 5-year average of fixed income and bond funds, you actually have a negative return for the past 5 years. But yeah, if you're in that newly target date of like, let's say 2036, 2030, 2025, it is riddled with fixed income and you have not done very well. The other frustrating thing about that is people say, Eric, look at my return. And I'm like, yeah, that also includes your contributions. And people get confused about that too. So what we have to do is we actually have to go in there, show you what the actual rate of return is in that target date fund. And then that's when people realize, okay, you guys, what do I do? And this is where we're literally taking 5 minutes. It's a 5-minute conversation to actually reallocate that portfolio that hopefully will be significantly more beneficial for you over time. And what are some other pitfalls that you've seen?
You know, I think people aren't paying enough attention to that, right? 46% of people admitted they have no idea what they're even invested in.
I think that's higher.
Well, and here, I'll tell you why it's higher, actually, is because there's a lot of individuals that probably don't want to admit that they know that they don't know what they're invested in or don't really know how their 401k works. And I get it, right? Nobody wants to admit that. So if 46% of individuals are saying, yeah, I don't know what I'm invested in, or I don't understand how that works. Think about how high that actual number is.
Right.
So it's becoming a huge issue. And like Eric said, this is like at the core of retirement, or Americans' retirement right now, the biggest piece for most individuals.
Yeah.
We don't want to be, at the age of, let's say 60, 61, 62, when we're thinking about getting close to retirement, of saying, let me check in on this and see how it's going for me.
Right.
You want to make sure you're taking care of this years and years ahead of your retirement while you're still contributing to this to make sure it's growing to that proper amount for your retirement.
The other thing is that like, if you are near retirement or you're in retirement, you need to reach out to your children and say, look, if you have a 401k, look at what different options you have. You more than likely, you have a Roth 401k option available, and you want to call your advisor and say, hey, my child is in this 401k. Can you help them make choices in this? And start educating them at a younger age and realize that, look, this is a huge accumulation tool. This is going to be more than likely the majority of your retirement. We have to start taking care of this. So you literally have to take out a couple hours every single month just to say, okay, I've got to review my 401k, make sure that my choices are good, and move forward. You want to make sure that you have a Roth option if you're putting that in there. That's all tax deferred and tax-free money for you. There's so many pitfalls. We can also talk about people that have been in money markets and cash positions inside of 401k.
And maybe they don't even realize it. If people think, oh, I put my money in my 401k, it's invested. Right. Sometimes that can default to a stable value fund, which a stable value fund just means you're sitting in cash, right? You're sitting in a fixed interest account, which again is not it's not providing any growth for you.
But Joseph, I just did what my coworker did. I thought I was doing right.
That's a real story too, right? We sat down with somebody who had said, we asked them, why did you pick this fund, which was a stable value fund, which was sitting in cash? Oh, well, the person that I was working next to 10 years ago said that was the best fund available in the 401k. And so I moved it into that. Or what's even better is, let's say that there's some market volatility, market turmoil. I just moved my 401k all to bonds. I'm going to be conservative. Guess what happens? Life starts getting hectic.
Yeah.
Things start going on. You get busy at work, children, kids. Guess what you forget to do? Put that 401k back in the market. And then before you know it, the boat has sailed, right? Yeah. And you're 300 yards behind the boat, and you're not going to catch up to that boat.
No.
So we can't be making these silly decisions with our long-term money.
Remember that your 401k is a very powerful driving force of not only your money, but also your lifestyle, part of your financial plan, and most importantly, your income plan. How are you going to support and pay for that lifestyle? So if you guys have any questions about your 401k, do not let it be mismanaged. Go to myIncomePlan.com, set an appointment with us, get a second opinion, and we'll see you soon.
Thanks for riding along with us today. We hope you got some good dirt. If you liked today's show, subscribe, like, and share with all your farm truck friends. We hope you'll join us for the next ride on Farm Truck Financial, where we're always planting seeds for a better future, 1 mile, $1 at a time.
Farm Truck Financial, we're riding with you down the back road steady.